topics and opinions expressed in the following show are solely those of the host and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, good morning, man. It's great to be here. I wouldn't say it's the greatest week coming up. It's a day that many people dread every year, tax deadline day, April 15th. No extra days this year because it didn't fall on the weekend, or no holidays or anything else. The 15th is the deadline. That means you have got to get your personal tax returns in or file an extension on or before April 15th. I also understood now that the post office isn't actually postmarking things properly or timely or going to get it done if it's after, their hours. Like they used to. So I recommend, if you're going to mail in an extension, get it in today. Even tomorrow. Don't wait till the 15th to file that extension. Now, so what does an extension mean? People go, hey, I'm going to file an extension. I don't owe any money now, going on from there. Well, that extension is just an extension of time to file your tax return, not an extension of time to pay. So if you're going to owe more than $900 on your tax return, when you file that extension, you must pay in the remaining balance. Otherwise, there's penalties and interest going to accrue from April 15th forward. Doesn't matter when you file it. It's going to backdate to April 15th when it should have been paid in. That's just the way the system works. And some people go, well, why do we have deadlines? Well, deadlines are there to make sure that you get it done within the time frame that the IRS wants. Deadlines are for procrastinators as well. Many people wouldn't file a tax return anytime soon if there wasn't a deadline. Some people won't move off of sitting around doing nothing unless there is a deadline. That's just the way life goes. We sit here at the witching hour, as I would call it, or maybe the last couple of witching days, trying to get tax returns in and filed for our clients as rapidly as possible. And a lot of our clients haven't sent in all their information, so we're asking them for more information. They're going, are we going to get these things filed yet? Well, we've been asking you for 2 months to send this information, but you're not going to get off the pot and send it to us. And then you expect us to do what? Imagine it? To come up with it magically? It doesn't happen. You've got to do some work. No matter who you're using for prepare. Or maybe, hey, look, maybe you're doing it yourself. If you're doing it yourself, you got to find the documents. And do you know what documents you need? Not all the time. And that's why, a lot of our clients that we end up representing for IRS resolution because they owe money, screwed their returns up majorly using one of those online services out there and didn't know what they were doing. So, you kind of got to watch what you're doing, but you need all the tax forms. Again, let's go back to the deadlines. For 1040, April 15th is your filing deadline or the extension date deadline. April 15th is the deadline to make your tax payments for 2025 taxes. If you're going to owe more than $900, you need to make sure you make those payments. April 15th is also the deadline to make your first estimated tax payment for 2026. Hey, who was the devil that created that one? Hey, let's hit them twice. You got to pay your 25 tax bill and you got to start making your 26 estimated tax payments. On what day? The same day, April 15th. So you do have those deadlines. Now, if you're running a corporation and you're filing an 1120, you have a deadline of April 15th as well. So if you're filing Form 1120, make sure you're either getting those extensions in or you're getting those returns filed. Now, if you have a partnership or you have an S Corp, you had a deadline back in March 16th. And if you miss that extension deadline, now they're starting to calculate penalties for every month that you're late for each and every partner. If you did file that extension and you filed back that extension for partnerships and S Corps back on March 16th, you only have 6 months to file that return, which makes it September 15th, depending on where the weekend falls. But you would have to get it filed by then. Now, if you file for your extension for your personal or your corporation that files the 1120 for April 15th, your next deadline is 6 months out. So that becomes October 15th. So you have the deadline to get everything done by then. But again, remember, it's not an extension of time to pay. It's just an extension of time to file. And then your quarterly estimates. So quarterly estimates are required for corporations that file 1120s and personal. So if your corporation ends up paying money every year or even paid money last year, then you may be required to file estimated taxes for your corporation as well. Now, when you're making your estimated tax payments, if you're in one of those dreaded states that has state income tax, you may be required to make estimated tax payments to the state as well. Yep. Everybody wants money. Everybody's going to get their money. And, you as a taxpayer is the one that's going to pay. Get them in, get them paid, avoid the penalties. Now, again, if it's a really small amount or maybe business is slower this year than last year, then maybe you got to look at how you're going to do your estimates. And you can modify your estimates based on actual performance versus doing, the minimum that's required by the IRS. So you can modify your estimates to actual every quarter. But you've got to be definitely looking at your business or looking at how you're making money to determine how much you're going to pay each and every quarter. Now, the fun part is when we're talking about estimated tax payments, yes, that first payment is due April 15th. But guess what? They don't give you 3 months to make the second payment. The second payment is actually due in June. So it's not truly a quarterly type plan. And then September 15th. And then the fourth one is January 15th of 2027. So, make sure you're getting those things done, getting those things filed. Now, if you're running a business to make matters worse, you have filings as well. You got 941s to file this month. You also have to make sure you've made your tax payments for the Social Security, Medicare and federal and state withholding as required based on the letter the IRS sends you every year that says this is how you've got to pay it in. We make our clients who are on payroll with us pay it in with each and every payroll as you go. That surely is a lot easier than coming up with money on the 15th of the following month, if that's what you're required to do. So, you just need to make sure that, hey, you dot the I's, cross the T's, because payroll taxes can really become burdensome if you're missing those payments and not making them on time or not filing the forms on time. It can get really expensive. And then your federal unemployment and your state unemployment are usually due by the end of the month. And each state is different. You got to make sure you file those state forms as well. There's a lot of things that go on in taxes that most people don't think about, because if you're W-2, you think everything's just coming out of your paycheck. You don't have anything to worry about. But you do need to modify and make sure that you have enough federal and state withholding out of your check so you're not having to owe, or you're not getting a big refund. Because the worst thing we see is that people leave money with the IRS and don't make anything off it, don't get any interest or anything else from it. And then you finally get your check back, and you could have been having use or investing that money as you go. So these are the fun things that we get to do. We're going to talk a lot more about tax code and taxes for 2025 and 2026 right after this quick break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're talking taxes, and more taxes. The other day I was watching TV or the news, and I was kind of amazed that they were talking about the president and President Trump and his approval ratings. And I just didn't quite understand it, because as a person that deals, with taxes, looks at the economy and looks at things that are going on, and I understand, we've had a little bit of war over there in, Iran, and, dealing with that turmoil in the Middle East, and gas prices have shot up because of that. But the economy as a whole, as we've seen it in talking with people, has drastically improved over the prior administration. We saw employment going up and through the roof. We've seen inflation coming down, and these things that have improved, the economy of the U.S. and more things starting to be manufactured here within the U.S. kind of amazes me of those approval ratings. Now, some of it has to do with some people didn't understand the rules and regulations behind some of the key 2025 tax changes. There are so many benefits for people who were working, in the hospitality industries. We'll take those that work a lot of overtime didn't quite understand, what the new no tax on overtime or no tax on tips, rules were. And, even us as preparers and stuff didn't understand exactly how they were going to designate this on the W-2 or designate this so that, you didn't have tax on overtime. Because the only part of overtime that wasn't going to be taxed was the halftime. So if you get time and a half overtime, your regular rate continues to get taxed, but the half portion didn't. So the overtime extra was not getting taxed, but they didn't break that out on your W-2. They didn't even tell people how this was going to be calculated. They didn't really explain this to people, and people weren't listening either, because I know people only half listen and they hear no tax on overtime and they don't understand what the full rules were. And then they see, hey, I was getting taxed on my W-2, or they see, taxes continuing to come out. It took a little while to get that adjustment going. Well, on your W-2, the IRS had zero requirement of companies to actually break out overtime. So when you're going to get your taxes prepared, not only provide them a copy of your W-2, but provide them a copy of your last paycheck stub that has year-to-date information. And that paycheck stub breaks out regular pay and overtime pay. They should go in and recalculate what that halftime was so that you're not getting taxed on that and be able to back that out. Now, they didn't say no Social Security or Medicare tax on it. It said no tax, federal tax. Little words that they left out. Now, if President Trump would have had his way, now you got to understand that everything he said going into this, no tax on tips, no tax on overtime, all gets modified in Congress. So your congressmen have to work together to pass the law to be what becomes enforced. And when they don't work together, you have what's happening now, where Department of Homeland Security, TSA, and all those people were not getting funded because one party didn't want that to be funded and is holding up a bill. Well, the same thing happens with the One Big Beautiful Bill. There were many things in this bill that were really, really great, but got pared down a little bit or watered down a little bit because one party did not want what President Trump was pushing for. That would have saved even more money for the taxpayers than what the One Big Beautiful Bill was already doing. Now, they also had limitations. So the limitations on no tax on overtime and no tax on tips, you can deduct up to $12,500 or $25,000 for joint filers of qualified overtime pay. And the same thing, a deduction up to $25,000 in qualified tip income is available as well. So there are some limitations on what the overtime is and the overtime rate was. So, if you're hitting the limits, it means you worked a lot of overtime, and a lot of halftime gets into that and got you to a really big amount. Now, when we were talking to people, they didn't understand car loan interest. They talked about car loan interest deduction, and you can now deduct interest on your car loans, but only on cars that were purchased after January 1, 2025, and only for U.S. assembled personal vehicles. So you got to look and see where your car was put together. Was it assembled in Mexico? You don't get the deduction. Assembled here in the U.S., you get the deduction. So the distinguishment is where the car was assembled. You know, you could be buying a Honda and assembled here, you might get the deduction. You are going to get the deduction. But if that car was assembled Mexico or overseas, then you're not getting the deduction. You may buy a Ford or a Chevy, and if it's assembled here, you get the deduction. But if it was assembled down in Mexico, you're not getting the deduction. So you have to actually get them to disclose where this car was manufactured and assembled. Again, it's promoting U.S. workers. Work done here at factories here in the United States. Pro-growth items, pro-American items. Let's, see where we were. When I was growing up many moons ago, it was the best products that were made here in the United States. But people got to where they would rather buy cheaper products. And you see now, products wear out a lot faster than the products that sometimes we grew up with way back in the day. And, maybe you can fault it for the kind of electronics that they use now, and they're using more gadgets in these machines. I know my washer and dryer that we just bought a few years ago actually has Wi-Fi in it, or Bluetooth in it, or whatever it is, that I can actually control a washer or dryer from my phone. Why? It's just kind of strange. I can connect to my fridge with my phone. It just adds to future problems within that machine of other things that can go wrong. It's just the way life is. Everybody wants more modern conveniences. So therefore they update the technology and things that are basic necessities here in life, refrigerator, washer, dryer. I guess you could use the old washboards and you don't have to worry about Wi-Fi or power or anything else. All you need is, water or hot water and some soap, and you can go out and do that and hang it up on a line. That would be getting back into some of the older days that people used to do way back when, before the washers and dryers were there. Can you imagine doing that? No, I can't imagine doing that. I don't know that you could either. But it's kind of fun to talk about. It's those fun gadgets and stuff. Ben had a question here. Are you saying when we go to purchase a vehicle, we need to ask where they put it together? Absolutely. You need to ask them where this vehicle was assembled before you buy it, if you want to be able to get the car loan interest deduction. And that deduction is up to $10,000 in interest on loans for the U.S. Again, vehicles assembled right here in the United States. So you should ask that question if you're really looking to get this deduction. It depends on what kind of car you're going to be buying as well, to see if they even manufacture them and assemble them here in the United States. We're going to keep talking about other deductions and other things for 2025 and get into some 2026 right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes, no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Man, I love the questions that are coming in or even comments. We got a great one from Bonnie. You don't need all that stuff to be on Wi-Fi. Hey, Bonnie, I 100% agree. I never connected any of my stuff to Wi-Fi or Bluetooth or my phone. You know, I don't want it to be on there. I could care less about it. You know, but it's just kind of interesting when you go out there and buy a new washer or dryer, and all of a sudden you can see you can add it to your phone and control it remotely. Hey, if I put stuff in the washer and it goes to wash, I just push the buttons and say, hey, you know, wash this. I'm not planning on, you know, walking away and controlling it from my phone. I guess it would be kind of cool. Maybe you can play games on your washer too. Who knows these days? I've seen the refrigerators where they have that little magic board on it, and you can write notes and do things. Man, I don't need those gadgets on my refrigerator. I don't need to be able to access apps on my refrigerator. I just need it to keep my food cold and my other stuff frozen. That's all I needed to do. And maybe make ice. You know, we'll take that modern luxury out there as well. Vince, you asked, can and will the dealer answer that question on each car they carry? And should you request that information? You should absolutely request the information. And yes, the dealer should be able to answer that question on each and every car they carry. You know, those are the kind of things that when you're there at a dealership, ask them, because it becomes important. And maybe you can use it to your advantage because you can't get the tax deduction for interest to get them to offset the price somehow to sell you a vehicle, because you're going to go buy an American assembled vehicle versus buying their vehicle. Hey, you use everything to your advantage. You know, part of negotiation, and as you know, President Trump said before, it's the art of the deal. Every time you're going in to buy a vehicle, a house, you know, any major purchase out there, sometimes it's all about the art of the deal and finding the deals, you know, that are there. You know, as I tell my kids, you know, when they're negotiating on, you know, their first car, you know, when you walk into a dealership and stuff, you know, it's, hey, you need this car, you need this vehicle, you need this, you need that. No, I have a car that runs. I don't absolutely have to have this, and I don't need it. This is more of a want. And if I want it, then I want it at the price I want it at, so we can negotiate. You know, we've walked away from many deals, you know, and it's kind of amazing because, you know, sometimes my wife shakes her head and just goes, why? You know, we were sitting at a dealership a few years ago negotiating on a vehicle that they actually had to bring in. It wasn't here local. And they made the mistake, you know, we were getting close to the deal, and then they wanted a non-refundable deposit because I'd have to buy the vehicle even if they wrecked it, bringing it to their dealership. And if I didn't buy it, they would keep my deposit. I walked away, went and found a vehicle somewhere else and negotiated on this. The last one we did, you know, we were at the dealership, we negotiated, had a set price on the phone with the dealership, got down to the dealership, and they changed the price. And the guy said he never gave us that price on the phone. We walked away from the deal. General manager of the place ended up making the deal with us at the price they told us on the phone. So it's, you know, having the desire to get something new, but also having the ability to realize that, hey, you can walk away. Hey, Bonnie, yes, you know, I feel the same thing, you know, having Wi-Fi, Bluetooth and things on your washer, dryer, everything else, sometimes even the cameras on the TVs and computers and stuff, just another way to watch every move you make, and tracking you. I mean, your computers, you know, when you're online, they're tracking you for everything. Sometimes it amazes me, and I've had advertisers, and we try to do advertising specific to truckers, owner operators for bookkeeping and taxes, and we give people that mention this show, Tax Talk for You, discounts at Trucker Tax Tools, on their bookkeeping and taxes just for listening to us. But it kind of amazed me, if you're on one of these sites that are selling goods or services, or talking about, let's say, new vacuum. Next time I'm on the sites, all of a sudden I'm seeing advertising for vacuums. So people are listening. They figured it out and how they can key around advertising around what you do, maybe even what you're searching, and maybe even what you're talking about. The advertiser one day was sitting in my office and talking about it. He goes, "That does not happen." I said, "Well, let's talk about a random product." We talked about a random product. He called me the next day and he goes, "Man, you know what? I was seeing ads for that product that you and I talked about, and I've never, ever searched for that product." Hey, I tell you, people are listening. We keep location on our phones because we want to make sure our kids are safe, and some of them are traveling here and there. So, we do pay attention to some of that. But a lot of times we turn other things off on our phones, and we enact privacy on our phones because it really shouldn't be to where people are tracking us. But that's just my opinion. It may not be your opinion or anybody else's opinion out there. We're conservative and want to make sure that, our kids and our family is safe, including our grandkids. I mean, I know how bad it's going to be, for our grandkids. We know how much this country owes and what the debt is for each and every person in the United States. And we know what that's going to hold for the future for, not just our kids, but our grandkids and our great grandkids. This country needs to stop spending money like running water and needs to rein in, what they're doing. Overspending, you and I can't overspend. If you overspend by double what your salary is and double what your family brings in, you're broke, you're bankrupt, you're done. You just can't afford to do that. Overspending every single year and just continuing to add debt into your family is going to be, the nail in the coffin for, retirement in your future. We got to get back to living within our means, get back to living within what we make and being able to put money aside for the retirement. Social Security isn't the be all end all. It never was meant to be the be all end all. It was meant to be a safety net. But they collect more and more and more money from you and I and the employers every single paycheck. And what do? They don't stock that money away for retirement for you and I. They spend that money frivolously within the government. And, I'm kind of amazed. There are a lot of things that me as a U.S. citizen would love to see changed. The term limits for congressmen, limitations on what every U.S. government worker is going to get in pensions. They should be in Social Security just like you and I. Government shouldn't have had its own little pension program. It should be the same as our pension program here as U.S. citizens. There was no two classes of people, the politicians and us everyday Americans. I know I'm getting on my soapbox and we're not talking taxes, but it impacts you and I and our taxes. Because, government, congressmen, senators, getting this isn't necessarily working. I should get off my soapbox. We're going to get back to talking taxes. We're going to take a short break and we're going to talk more about the changes for 2025 and 2026 right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, Jeff, thanks for the comment. You actually enjoyed my soapbox. Hey, sometimes we get to talking about things that affect you and I and everyday Americans, and it has a lasting impact. And, growing up, when I grew up, you've seen the changes in American politics, throughout the years, and you've seen some of these people serving probably as long as I've been around, and it's just amazed that people can do that. But anyway, what else changed? Now, one of the other big changes was the senior deduction. They added a deduction to make Social Security non-taxed, supposedly. And what they really did is gave a $6,000 deduction for seniors. Now, they didn't say at that time that you had to be 65. They were kept promoting it as Social Security would not be taxed. But they gave you this $6,000 deduction for seniors age 65 and older. So if you retired and started taking Social Security at 62, and you're not 65 yet, you're not getting that $6,000 deduction. See, somebody changed the rules a little bit from what Trump was saying to what had actually happened. And then there were phase outs for that too. So not everybody and not every senior was getting that deduction, because they weren't going to let those that make more money qualify for this deduction. They'd taken away and capping it. So there are caps to things, limits to things, and makes people that make more money pay more taxes in. Now, the other thing that really helped people in states that have a high state and local tax was the deduction for state and local taxes was increased to $40,000. It was $10,000, so it went up to $40,000. So if you're high in property taxes, or maybe high in state income taxes, or a combination of both, you now got more of a deduction, and maybe you'll be able to itemize. Whereas prior years, you might not have been able to itemize because of that SALT cap out there. That being said, we've seen more people itemizing from states that actually have state income tax, and especially if you've taken a mortgage out in any time in the last few years. Now, for 2026, we're seeing a lot of the same things are still there. Standard deduction, though, is going to increase to $16,100 and $32,200 for married filing jointly. That is up from $31,500 for married couples and $15,750 for singles. Not much of an increase, but every little bit helps. The child tax credit is going to be $2,200 and will be indexed for inflation. That senior deduction is still there. It's still for those only 65 and older. And, it's that $6,000 deduction. And then again, still subject to income phase outs. Sorry about that. Now, those phase outs will be there. And I think this deduction only stays through 2028 and it would have to be renewed. No tax on overtime and tips. That deduction for 2026 is up to still $25,000 or $12,500 for individuals. So, you do have limitations there on no tax on overtime. No tax on tips is up to $25,000 for qualified tips as well. They did a huge increase in the SALT cap deduction. It went from $40,000 to $40,400. I was just kidding about the huge, but got to have a little bit of humor when you're dealing with taxes somewhere out there. Charitable contributions. This is new for 2026. So 25 and before, you actually had to itemize. Now, there was 1 year or 2 years back, a few years ago, that they allowed up to $600 deduction above and beyond the itemized, above and beyond the standard deduction for charitable contributions. One of the things and a big impact that the Trump tax code had back in 2017 when it was first enacted was very few people, unless you had a lot of mortgage interest, were itemizing because of the limitations for the SALT cap and how high that standard deduction is. You got to get over that in 2026, the $32,200. Well, if you can't get over that, then you had no deduction for charitable contributions. And so what do you think that did to charitable contributions? You're right. It lowered the amount people were giving to charities. So how do you fix it? Well, you fix it by allowing a certain amount of money to be deducted, regardless of whether you itemize or you take standard deduction. So in the one big beautiful bill, this is allowing non-itemizers, you're taking the standard deduction to deduct up to $1,000 if you're single, or $2,000 if you're filing jointly in cash donations to charity. So this is not where you can take, what you give to Goodwill as non-cash items. No, none of that can go here. It actually has to be cash. What qualifies as cash? Check, credit card, debit card, all that considers to be cash, or good old hard cash. You can do that as well. I suggest you do some tracking on it and make sure that you have that if you're taking this deduction, just like we say, support everything else. If you're going to church and they can give you envelopes, you submit it through an envelope. And that way they do tracking for you and send you the form that says you gave X number of dollars that are out there. So, there is some tracking and benefit to doing that. So there are things that you need to do and can do that's going to save you money in 2026. Now, retirement. The limits are increasing in 2026. That means the IRA contributions are going up to $7,500 or $8,600 if you're over 50. So they give you a little bit of ability to catch up your IRA contributions if you are over 50 years old. Now, 401k contributions, you can contribute up to $24,000 or up to $32,500 if you're over 50. Really nice thing to do. Now, if you're young, maybe you just got out of high school and you started your job, or you got out of college and you started your new job, And the first thing they give you is your benefit options and things like that. And hey, if you're a W-2 and you've got an option to contribute to your 401k, do it. Do it from day one. Because when it comes out of your check, the first time you feel it, oh, wow. That's just the same as, hey, the very first check you get when you're working, and all of a sudden you see that they take out 7.5% for Social Security and Medicare right off the top. And then they take out money for federal income tax and then maybe state income tax. And you realize, oh my gosh, I'm being taxed. But 2 checks, 3 checks down the road, you don't feel it. You don't pay attention. Why do you think the government says, hey, we want you to withhold taxes from their paycheck and not make everybody pay in estimated taxes? See, if everybody had to write a check for estimated taxes every single quarter, you'd be voting differently because you would be going, I don't want to be taxed. And the more you make, the more tax you're paying, and you keep doing this, it would be impactful. So you start making that payment contribution into your 401k at the max amount that you can off your check. After the first couple of checks, you don't feel it. You don't notice it, but it accumulates. You can easily become a millionaire doing this and never touching your 401k until you get to retirement. Imagine what it would be if you could actually afford to put $24,500 into your 401k every year. But even if you're only putting the $7,500 or $8,000 into it, and the company's matching some percentage of it, they're giving you more money to be able to do what? Sock away money for your future retirement. Why rely on the government for retirement when you should be relying on yourself? And Social Security just supplements what you've been socking away for all those years to be able to do it. Now, your limitations, 401k again, is $24,500. If you're over 50, it actually jumps up to $32,500. And then age 60 to 63, you can have a catch-up. You have a higher catch-up contribution limit of nearly $36,000 available for employees into a 401k plan starting in 2026. Wow, that's some great things. We've seen this year higher refunds due to the new larger deductions and increased credits. Income thresholds for tax brackets were adjusted for inflation and are being adjusted again. That one big, beautiful bill helped many Americans save money on taxes across the board, such as the senior deduction, things like that. No tax on tips, no tax on overtime, all helped you. So at the end of the day, get your taxes filed. Deadline's coming up. It's just a couple days away. Get your extension filed or get your taxes filed. Again, remember, extension is only extension of time to file, not an extension of time to pay. If you're going to owe money to the IRS, pay in the money before April 15th. You can go online and make the payment. Many systems file the extensions and it will apply payments for you as well. Pull it from your bank account and pay it. Hey, we're running out of time. We had a lot of fun here today. Got to listen to me on my soapbox. Hey, we're here every Monday, 10 a.m. Eastern time on W4CY Radio. Hey, get over to Tax Talk, 4U.com. Follow us over there. Follow us on Facebook. Never miss an episode. We're going to be here talking about taxes and impacts for you and your business. And we will see you next week right here on Tax Talk for you. You have a very God-blessed and glorious week. Get those extensions filed. And we'll see you right here again on TaxTalk4U.com on W4CY Radio. 10 a.m. Eastern. Be here.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at TaxTalkForYou.com. See you next week at W4CY.com.